you're ready to rock?
Just about. It's taking a bit longer. Okay.
Okay, I'll start now.
Mhm. Good evening, ladies and gentlemen. We're just waiting for a few people to come on board and join us. So they'll just taking a few moments. Just give me a few moments here while we wait for our members to join this webinar. So thank you. There's still quite a few people joining, so thank you for that. My name is Justin Colley. We're just ticking over all the attendees that are coming out of the waiting room, so just bear with us a moment until we start. So it's still coming through. Just takes a few moments. Okay, we'll make a start. Welcome. My name is Justin Colley. I'm the Business Development Manager of Australian Catholic Super. Today, I'm going to talk about getting your super on track and ways to put money into superannuation. With me today is one of my colleagues, Paul Lynch, who's in the background controlling all the things in the back, and any questions that come through, Paul will be filtering those through to me at the end of today's session. We are going to try and stick to time and finish by within the hour. So more than likely, we'll finish well and truly ahead of time. But if not, we'll have to cut things off around 6:30 Sydney time. So you'll notice on the Zoom meeting, there's a chat facility and Q&A. You can communicate with us through that and ask us any questions, which we'll come to at the very end. There's also going to be a link that we'll send to you at the conclusion after the seminar is concluded, as well as Paul will put out a link later in the webinar about if you want more information from the fund and to contact us. And also, this session has been streamed live on Facebook, although we're having a few people coming through on Facebook as well, I can see now, which is great. So it's a great way of being able to communicate with our members. Before we do start though, I would love to acknowledge the traditional owners of the, or custodians of the land in which I work and live, and recognise their continuing connection to land, water and community. I pay respect to elders past and present. We are required, before we present these webinars and seminars and information sessions, to give a disclaimer. Essentially, everything that we talk about today is a general nature. We don't take into account anybody's personal circumstances. Should you want personal advice that looks at your own circumstances, we suggest that you contact a licensed financial planner. And we have financial planners at Australian Catholic Super who can assist you. And you can contact them by calling our office on 1300 658 776 or reach out to us through our website there at catholicsuper.com.au. As I briefly mentioned at the start, I'm just going to talk about how much super do you need and how much do you have. Ways of boosting your super, pretty much today just through contributions, and our member portal, which I'll talk about straight up, and how we at the Australian Catholic Super can assist you and help you along your journey with us. So how much superannuation do you have? And it's very important to keep on track of it. Making sure that your employer's putting in contributions on a regular basis. You may want to work out if you need to add any more. And we've got a tool, which I'll be talking about shortly, which can help you project some balances. We'll also, it also may assist you by knowing your balance, about assist you in planning for retirement. It may also assist you in having other benefits through superannuation, such as insurance and so on. So it's really important to be engaged with your superannuation. So the best way to do that is through our member portal, or first of all through our website. And you go to our website and you can log in to the member portal there where the arrow is showing the login button. Once you log on to the member portal, there's many different things that you can do there. So for example, there's on the right hand of your screen, it'll give you your most up-to-date balance. It will give you a summary of the contributions that have come in, as well as investment earnings, plus any fees that have come out, as well as charges for insurance and so on. It really keeps on track of how your superannuation is progressing there. And it's also a history there, as you can see by the bar graphs there. Also, you can change your investment options when you're on the member portal. You can view the amount of investment earnings that you've made, both in a dollar figure and also through as a percentage. You can also make contributions, and we're talking a lot about contributions today. You can make contributions through the member portal, update your details, amend your beneficiaries. So if you wanted to put in a non-binding beneficiary, you can do that through the portal as well. And there's many other things that you can look at doing through the portal there. So when we look at how much do you have, ASFA, which is the Association of Superannuation Funds of Australia, they do a regular survey and work out how much you'll need for both as a comfortable lifestyle and a modest lifestyle as both a single person and a couple. We're focusing on a single person at the moment, and their balance for a comfortable lifestyle is $545,000. Now, this takes into account a lot of different factors, different lifestyle. We all have different needs, all have different aspirations of what we want to do in retirement, and have different ideas of what retirement means to different people. If you go to, I'll look at the screen here, this is a table which what they look at and what they consider a comfortable lifestyle, a modest lifestyle, and the age pension. So a comfortable lifestyle is an annual holiday. Currently it's in Australia, as we can't travel at the moment. We've got many members very disappointed about that at the moment. Modest lifestyle might be very short breaks just within your own state or within Australia. And if you're on an age pension, it might be a day trip. And I won't go through all of these, but I'll just touch on a couple. A comfortable lifestyle might be owning a reasonable car, as opposed to modest, where it might be a bit older and less reliable. Being on the pension, it could be public transport and so on. A full listing of what makes up a comfortable lifestyle and a modest lifestyle can be found at the ASFA website at superannuation.asn.au. And they'll give you, it's called the retirement standard, and it will tell you all the different aspects there of what is that comfortable and modest lifestyle. So we have our own retirement adequacy planning tool in accumulation, or for short, we call it RAPTA. In short, it's a tool that is designed to help you understand how changes to your income, contribution rates, investment performance, annual pension, and other factors can affect your retirement balance. The tool is a model only though. It's not a prediction. It does not constitute financial advice. So that's important to know, and they are estimates only. But as I mentioned, these are demonstration tools, and all the assumptions are on the tool when you use it. I'll show you where they are in a moment. So when you go onto RAPTA, you go onto the member portal and you look at the blue ribbon there on the member portal, and the last icon on the right is retirement projection. Once you click on that, the following screen will come up. Your details, including all your balances, are pre-populated for you to make it very easy for you. All you have to do is press get started, and all the assumptions that we use, as well as the disclaimer, are found on the links there, just above your account balance there. Now, once you click on get started, you get a screen that looks like this. So it is automatically defaulted to an investment choice of conservative. However, you get to choose which investment profile that most suits you, and different investment profiles have different weightings to defensive assets compared to growth assets. So there's about 5 or 6 investment options that you can choose from there, and they range from conservative, which I mentioned, which is really 95 to 100% defensive assets, or you can if you're a bit more cautious, That's 70 to 90% defensive and the remainder in growth. And we've got moderate, that's a 50 to 60% defensive. Assertive is leaning more towards the growth options there, 60 to 70% in growth, which would align with our balanced portfolio. The aggressive option, 75 to 80% growth, is again aligns with our growth option. And highly aggressive, 95 to 100% in growth. So that's a shares type portfolio with us. Once you choose which investment option best suits you, you choose that, and then it will come up there and you just go next. It's as simple as that. And once you've gone next, the superannuation projection is calculated to your pension age. In this case, the pension age is set at 67. And then it will show you drawing out in the pension phase until all the funds are exhausted. So for this example, it runs out at about 85 there on the screen. However, there's 5 tabs down the bottom there, which are pre-populated, and you can click on either the 1, 2, 3, 6 or 9% additional contribution tab, and it will show you what a difference it will make to your superannuation benefit and how much longer it will last in the retirement phase there. Some people may be able to retire a bit earlier than they first expected. Let's hope so. Some may have to work a bit longer. So let's just all hope we can aim to retire that a little bit earlier. So once you've got that, if you are unsure, we are here to help you. The most important thing about Australian Catholic Super is our personalised service, and we see our need, or see our work is really helping our members achieve comfortable lifestyles, and that's where myself, as one of the business development managers and our regional managers, all are able to assist you, as well as our call centre staff and financial planning team. And they're just a phone call away, call centre number of 1300 658 776. But just things to know at the bottom of the page of when you do that assumption or that projection on our Raptor tool, it does predict wage growth of about 3.2%, a CPI of 2%. It shows that the ASFA target for a comfortable lifestyle for a single person is $545,000, and it's based on an admin fee of $78. And as I said, it's pre-populated with your current account balance. It looks at what your SG and salary sacrifice, or when I say SG, your superannuation guarantee and your salary sacrifice contributions have been for last year, and it predicts that they will continue along the same journey, and that's where it will give you your outcome at retirement age and how long it will last. So that's just a very quick demonstration of how our Raptor tool works, and we're more than happy to demonstrate that to you if we meet you one-on-one. But as I mentioned before, it's very easy to do by logging onto the member portal at catholicsuper.com.au and doing your own projection there. So how can you boost your superannuation? There are a range of ways to increase your super, such as making concessional and non-concessional contributions. I'm going to explain the difference now and how they all work. And it's quite important to know that there are contribution caps on how much you can put into superannuation. The first is concessional contribution limits. So concessional contribution limits, they are $25,000 for this current financial year. They are changing though at 1 July 2021 to $27,500. But for the remainder of this financial year, for the next 2 months or so, the maximum you can put in is $25,000. Those concessional contributions, though, are made up of your employer contributions, which are your superannuation guarantee levy of currently 9.5%, and is also going up to 10%, which has been scheduled to go up to 10%. So we will know more about that after the budget. Your salary sacrifice contributions that you put in as well as any employer additional contributions. And then there's also personal deductible contributions, which is relatively new. It's only been around for the last, I think this is the second year that you've been able to do it. So that's really designed for people who haven't put in the full $25,000 contribution, or met their contribution cap, and may, for example, put in $15,000. And they've come to this time of the financial year with only 2 months to go and think, I can really afford to put a little bit more money into superannuation. You can put that through as a personal deductible contribution to the fund, and we'll charge that tax at 15% when it comes in. And then you can when you lodge your tax return, that's when you'll get the tax rebate there for it there. We'll give you a letter to give to your accountant to do when you do your tax return. It's also very important to note the contributions when they come in on a concessional basis are taxed at 15%, which is the contributions or superannuation contribution tax limit. For our high income earners, and there's not too many of us around, unfortunately, but if you earn more than $250,000, the contribution tax is actually 30%, not 15%. Now, so why should you salary sacrifice into superannuation? Well, when you do salary sacrifice to super, that's when you are getting that 15%, up to 15% tax saving there. So if you look up on the screen there are the tax rates at the moment. Most Australians would fall into the second, third, and fourth tax brackets there of 19, 32, or 37%. So if you're on a salary of between, say, 45,000 and 120,000, you're paying marginal tax rate, excluding your Medicare levy, of 32.5%. If you're able to put money into superannuation through salary sacrificing, up to the contribution cap limits, well, there's a tax saving there of up to 17.5% there. So it's really good tax saving to put money into super if you can afford to do so. And I often get asked, why do the government do this? Well, the main reason the government do this is they want you to be, or they encourage you to be a self-funded retiree. So not utilising a full age pension. You may qualify for a part pension, but that's why the government do it, because they want you to fund all or part of your retirement. So if you are earning less than $18,200 though, I would recommend you not salary sacrifice, because up to $18,200, you're not paying any tax at all. And if you're a salary sacrifice, we have to charge you tax at 15%, and you're being charged tax for something you didn't need to do. So then you'd be able to put that money in as a non-concessional contributions, which I'll speak about in a moment. So I'm just going to move on and give you an example of somebody who salary sacrifices and they earn $100,000. And we just did this. I know it's a high salary, but we did this for round numbers. So if you earn $100,000, that works out to be about $3,846 per fortnight. So if you put no additional contributions in, you've got tax then of $962 per fortnight, which gives you a take-home pay of $2,884. If you can afford to, say, salary sacrifice 5%, that is $192. So that comes off your gross taxable income, and now you're only paying tax on the $3,653 as opposed to $3,846. So when you are only paying tax on that $3,653, the tax now is $896. So essentially a $66 saving per fortnight in tax there. So to put an extra $192 into superannuation, it's really only affected your take-home pay by $127 for that $192. So to really look at and dig down a bit further, it's really about $9 a day to put an extra $192 into superannuation per fortnight. Now, as I mentioned before, it's a $66 tax saving per fortnight, which equates to just over $1,700 per year. Or if we expand that out even further, say for 10 years, well, there's over $17,000 just in tax saving there by sacrificing $9 a day. And it will make a huge difference to your retirement savings. And we, again, are able to assist you by doing a projection through our Raptor tool. Our financial planners can assist you, and our over-the-phone advice people can certainly assist you with salary sacrificing contributions and so on. There is also limits for non-concessional contributions. So these are your after-tax dollars. So the after-tax dollars that you put into superannuation, they come in on a tax-free basis. So to have that money in the bank, for you to put that money into superannuation, you've already paid tax on that. So we're not going to charge you tax again. So that's what's called a non-concessional contribution. Now, you may have sold an investment property, other investments getting ready for retirement. You may have come into some inheritances or so on. You can put in up to $100,000 per year if you're under 65. You can also, if you've got a lot of money there, put in 3 years worth of contributions in one hit and nothing for the 2 years after that. So in effect, you can put in up to $300,000 for a 3-year period. Once you turn 65 though, and between 65 and 67, you can still do the $100,000, but it's only $100,000 per year, and you don't have to be working. So anybody under 67 can put that money into superannuation and not be working. Once you hit 67 though, and up to 75, you can still put $100,000 into super per year, but a work test applies. Now that work test simply says that you work for 40 hours over 30 consecutive days at any time during the financial year. So July comes around, you do 7 or 8 casual days, there's your 40 hours and you're able to put money into superannuation for the remainder of the financial year. Once you turn 75 though, you can't put any more concessional or non-concessional contributions into superannuation. There is a cutoff there at 75, excuse me. Now, the limits for this are changing also from 1 July. So everything I said to you about the rules for making non-concessional contributions are exactly the same, except the limit is increased from $100,000 to $110,000 from 1 July 2021. So bear that in mind if you are thinking of doing that in the new financial year. Now, there are other ways to contribute to superannuation. The first is through the downsizer rules. And the downsizer rules are for people over 65 who may sell their principal place of residence and want to put that money into superannuation. There are a lot of rules around that, so we do recommend that you get advice for that, and we do a lot more information about that in our retirement planning seminars and webinars. But essentially, you can put in up to $300,000, you and your spouse or partner. But a number of conditions have to be met, and it has to be done within 90 days of settlement, and you need to be over 65. You can also make spouse contributions to your spouse's account. So you may want to top up your spouse's superannuation, or they may be a low income and you get a spouse rebate. You can put in spouse contributions as well. And the other good thing to think about too is consolidation. Many of us have multiple superannuation accounts. It's a good idea to consider rolling them all over into one. There are factors to consider, such as do those other funds have life insurance and so on attached with them? And do you need to keep that life insurance? Well, if that was the case, we are able to assist you again by calling our call centre. And they can assist you by not only rolling over your superannuation benefits, but also roll over what you've got in life cover. So for example, if you've got $100,000 worth of death and total permanent disablement cover with another superannuation fund and $100,000 with us, you can fill out a short medical questionnaire, and assuming you're healthy and there's nothing there that our insurers are worried about, they will take on the liability or the risk of that $100,000 and essentially would have $200,000 with us of life cover and have it all together. It's just much easier when it's all together for you. Now, we can assist you by consolidating, as I mentioned before, by calling our call centre, and they can do it all over the phone for you. Alternatively, many of us have the MyGov app on our mobile phones and so on. If you log on to MyGov and go into the ATO section or the Australian taxation section of the MyGov account, you go to superannuation, it lists all the superannuation accounts that you have there. And if you choose to have, if you choose to roll over, you can choose Australian Catholic Super as your primary superannuation account, and then choose the other funds that you want to be rolled over to Australian Catholic Super. And then the tax office or the ATO then writes or sends messages to all those funds that you want to roll over to, and those funds roll that money over within a couple of days. And all your money then is consolidated, and it's easy to keep track of, and it's all together. And I'll just remind people too, that if you've got any questions, please don't hesitate to put them through the chat facility, and we'll come to those a bit later on. So how can we help? There's been a lot of information that we've gone through in a short period of time today. We can help by a number of different ways. So first of all, through general information. That's where I can help you. Our call center staff can help you. Our regional managers can assist. We can assist you with general information about your super and pension accounts and answer any questions you've got about that. We can assist you about all the different account information. We can also do a rapid demonstration with you, assist with forms and so on. To speak to a regional manager, please click on the form, and Paul, my colleague, has just put a message out through the chat facility with that link. So if you click on that link, it will put in your personal details there, and then we'll be able to make contact with you and answer those questions there. If you want a bit more advice and want what we call limited advice, our over-the-phone personal advice team can assist you with salary sacrificing. So that example I gave you before, they'll be able to do a real-life example for you based on your actual salary and how it'll affect your take-home pay. And they can do it at varying different percentages and different amounts to see what suits you. They can also, if you're not sure which investment option, Australian Catholic Super has many different investment options, and you can tune into our investment webinar in a few weeks to hear about our investment options. But our limited advice team also can assist you in choosing the right investment option. I touched on in the Raptor tool those different types of cautious and conservative, aggressive type investors. They can go through and work out what type of investor you are and making sure that you're invested in the right option. They can also assist you with insurance, as well as if you want to make out a transition to retirement allocated pension. Again, all you need to do is fill out that link that Paul has just put through in the chat box, or call our 1300 number, and which is 1300 658 776, and they'll be able to assist you along the way there. Or if you want comprehensive advice, there's a number of ways that our financial planners can help you with a number of different areas. It's a holistic approach. Our financial planners look at everything. So it's not just what you have with Australian Catholic Super. They're looking at the property that you have. So you may have some investment property, you may have shares, superannuation elsewhere, and also the superannuation with us. They look at any cash that you may have, as well as your own home and what you plan on doing with that. They assist you to help you maximise the most out of Centrelink, and also make sure that they're trying to minimise tax for any beneficiaries by doing some estate planning for you as well. So our financial planners really assist you on a whole number of levels there. It is a fee for service, so they will charge a fee, but they're very upfront with that fee, and will quote any fee before they do any work for you, and you can decide whether or not you wish to go ahead. Also, you may have heard, we announced back in August now, the Australian Catholic Super is merging with NGS Super. So we're really excited about that. It's going to be great for our funds to come together. We are both very similar in both size of members and also in our funds under management. When we come together, we'll represent more than 200,000 people primarily working in education, both in the Catholic and non-Catholic sectors. Those 200,000 members will have probably around a $23 to $24 billion invested. So it's going to be quite a large industry fund for people in education. We are still going to be strongly aligned with the Catholic Church. The Catholic Church is also heavily aligned with NGS. They actually currently appoint one of the, or two of the directors, I believe, to the NGS board, as well as the South Australian Catholic Church members all put their contributions with NGS as well. So at the moment, we are still going through the due diligence process. We have done the high-end due diligence, and now we're going through and fine-tuning, and they're pulling out what's best in both funds to make sure that we give to our members the best of both worlds. And no name, we often get asked, has a name been decided yet? We are still working through the names and what our members like, and some of you may have been surveyed, because there has been surveys that have gone out and so on. So all those responses, both from our members, our stakeholders, people who are employers who contribute to us, have all been out there, been surveyed and putting in there what they thought is the best name for us. And there it's all been compiled at the moment. So hopefully in the not too distant future, we'll have a name for the fund. Also, I want to just bring your attention to other webinars. So this has been our first time we've done this, this webinar, just about a bit of a rapid demonstration, taking control and empowering your own journey in superannuation, and making sure that you do things through the portal. As I mentioned earlier, we have an investment webinar coming up on the 10th of May, which is our quarterly investment update. Michael Block, our Chief Investment Officer, usually runs those. We've also got a retirement planning webinar coming up next week as well. And we also run other webinars through the year, such as aged care and Centrelink, so keep an eye out for those when they do come up. That's pretty much a lot of the content that I was going to run through with you today. Paul, can I ask you to come online now and just give me any questions that any of our members have asked?
Yeah, thanks, Justin. I suppose we've got a few questions, so I don't know whether we've got time to go through them all, but we'll try our best. The first question that we've got is Susanna. So Susanna has asked the question of, what is the cost of the advice? Just for clarification, Justin, that question came up when you were talking about the over-the-phone advice service. Okay. So if you could probably go through the cost features of to differentiate, that'd be great.
Yeah. So thanks, Paul, and thanks. Did you say Susan?
Susanna.
Susanna, sorry, Susanna. Thank you for the question. Susanna, over-the-phone advice is actually no additional cost. So that is a single issue. So if you just wanted to go through salary sacrifice with a over-the-phone advice representative, or just investment choice, or just insurance, they can do that for you at no additional cost. They won't do all three together, but you can do all three over a period of time. If you do want the comprehensive advice, they will charge a fee, and that fee will be upfront. They will give you a cost of that fee, and it all depends on your situation. So everybody's situation is different. But basically, the financial planning fees are anything between $1,100 or $1,100 and about $2,500. So they would give you a quote first once they get an understanding and get to know you and what they have to do for you, and then let you know what that fee would be, and then you choose whether or not you want to go ahead with it. And the superannuation part of that fee can sometimes be deducted from your account balance with Australian Catholic Super. Thanks, Paul. Susanna? Thanks,
Justin. Chris asked a question, and she's asked in regards to, you clarified the amount needed for a single person looking at retirement. Is there any idea or figures around for what is required for a couple?
Yeah, thanks, Paul. Thanks, Chris. Chris, I think I quoted for a comfortable lifestyle for a single person is $545,000. For a couple, that is $640,000. So that takes into account that is sharing bills and the cost of utilities and so on. You'll be traveling together and so on. So 545 for a single, 640 for a couple for that comfortable lifestyle. But as I mentioned earlier on, there is a full listing on the ASFA website at superannuation.asn.au of the retirement standing of what you'll need for that comfortable lifestyle once it's comprised of.
Thanks, Justin. Sonia has just asked a question in regards to the contributions through the salary sacrifice. If it's too late, can she catch up on an amount? You quoted a process. She just wouldn't mind clarification on that.
Yeah, thanks, Sonia. Sonia, you can do contributions or make up for lost time if you haven't done salary sacrifice. All you need to do there is work out how much you can afford to put in and don't go over the contribution cap, and what the gap is between what you've already put in through those concessional contributions and the cap. So for example, I think I used the example before, if your SG contributions are $15,000, that means you've still got up to $10,000 you can put in to superannuation as a deductible contribution. So you make that contribution, you let us know when you complete the form, or you can do it through the member portal that you're claiming a tax deduction on this. We'll charge the 15% tax on that contribution, and then you get to claim the remainder of the tax rebate through your tax return there.
Thanks, Justin. It certainly is a handy alternative if you're juggling or going close to the wire with the limit, instead of saving or changing the form through your payroll service to get it right. You can just do that lump sum. So thank you. Just got another one here from Bill in regards to member investment choices.
Yes.
Can you change those online?
Yes, Paul, or Bill. So Bill, if you log onto the member portal, you can go into the investment section there and choose your own investment option there. And again, if you are unsure which investment option is best for you, I strongly recommend that you contact our limited advice team. And our advice team, over a 30-minute call, can go through there and work out what type of risk profile and your appetite to risk is, and recommend which is the best investment option there for you.
Lovely. Thanks, Justin. In the interest of time, that's all the questions that we have.
Well, thanks, Paul. And I just want to thank everybody for joining us today. I hope you got a bit of information about it. If you do have any questions, please don't hesitate to call our call centre on 1300 658 776. Email us at our web address at catholicsuper.com.au, or you can go to our fund office at catholicsuper.com.au and email us. We're also available through social media through Twitter, Facebook, and LinkedIn. So I want to thank you all for your time today. And a survey will be also emailed out to you later this evening. I'd really ask you to please take your time to complete that. That really lets us know what you think of these type of webinars and how we can improve them going forward. So again, thank you for your time tonight.